Hey everyone, hope you're having a great holiday season, and we're winding down the last trading session of 2018. So I wanted to get this last opportunity to get a video out and just recap a little bit of the successes of 2018 and to talk a little bit about the outlook for next year. Stocks this year are going to settle close to unchanged for the year, but that doesn't come anywhere close to telling the real story. Um, Starting the year off on record highs, seeing a couple sell-offs, and then going on to make record highs, continue to make record highs through um, till September, and then really seeing the sell-off begin here. It's the first real significant uncertainty that we've seen in the market in years, and the extra volatility all year really has provided tremendous trading opportunities, and we tried to model that. We started that this year by tracking the gains and losses of trades following our 1 and 3 minute chart, and we've published them on the site. If you haven't seen them, you can find them on the page here. The model took the winners and losers, and there were over 2,300 potential trades, and after a year of tracking, the outcome was close to 120,000 in gains. So if you've seen sort of the analysis going around that there are virtually no asset classes that stand out as a winner this year. Clearly you can see that this environment is providing the opportunities for volatility traders to be the potential winners. Of course, this requires an edge, so I want to take this chance to kind of go a little bit deeper into the numbers and help everybody understand the edge. The very first thing I want to highlight about the edge is how the potential gains are distributed. I've spoken with many people this year who kind of take the wrong expectation away from these numbers. I think the main misunderstanding is trying to formulate what it's like on an average day, and there isn't necessarily an average day because the price action really dictates when the extreme returns are going to come and when we have quiet periods. And you can see here we have a table here that shows the returns on a week-by-week basis, and you can see how it's not normally distributed, so there really isn't an average experience. Trading these signals is more about the extremes. When we have extreme volatility, we have extreme gains. And the rest of the time, if things are quiet, it's about managing the risk and ensuring that the downside is limited so that we don't have an extreme downside. It's a combination of timing and correctly identifying when to stay in a position and when there's a big move and when to get out. And it establishes a very specific edge, which I hope the additional metrics here now will help to clarify. So here's a spreadsheet of the day-by-day breakdown, and I've pulled out the sessions that had a potential gain of over 1,000. And there were just 51 big trading sessions for the signals this year, but so that's just a quarter of the days, but you can see that they count for over 80% of the total gains. Back here on the page, we have also the percentage of winners and the average size of the winners and losers. And the takeaway here really is the same. The signals have a 40% win rate, which means that the edge must come from somewhere else. And that gain, that again, is catching the big winners. When there's a big trading session, the returns on the day also tend to come from just a few big winners. So it's really all about taking limited risk for a shot at the big winner and then staying with it. And it's a formula that's worked for AbleTrend users for over 20 years, and it only gets better during the increasing volatility, and not just for day trading, but also for longer term swing trading too. Last quarter of this year seems to put us into bear market territory. Bear markets are characterized by faster moving price action lower, which can create some great opportunities to swing trade to the downside, but it can also create great opportunities to the upside because bear markets are also characterized by vicious pullbacks to the upside. And that's a good thing for quicker gains, as is evident from the monster rally that we saw in the Dow last week. So the outlook for 2019 is not necessarily an easy year, but potentially a very fruitful year for traders who can time the moves and manage the risk, and I think that's something to celebrate too. So happy new year, and talk to you next year.